Welcome to the channel Get Rich. It's been some time. I uploaded a video, so I have caught up with some other things. Sorry for the break. So we are back. So today the company I'm going to analyze is Sun Pharmaceutical Industries Ltd. So let's first have a look at Pharma Industry before going into Sun Pharmaceutical Ltd. First, let's have a look at the global pharmaceutical industry. The global pharmaceutical market estimated at $1.2 trillion in 2019 and is expected to expand at a compounded annual growth rate of 3 to 6% to $1.5 to $1.6 trillion by 2024. Much of this is likely to be driven by the volume growth in emerging markets and the launch of high-end specialty innovative products in developed markets. So the US and emerging market will remain key constituents of the global pharmaceutical industry. The former moving to Swiss and later due to their growth prospects. The pharmaceutical spending in the US is estimated to grow at 3 to 6% CAGR between 2019 and 2024 to reach $605 to $635 billion by 2024. While the spending in emerging markets including China is likely to grow at 5 to 8% CAGR to $475 to $505 billion by 2024. These two regions will be key contributors to global pharmaceutical growth. So, the pharmaceutical spending in the top 5 Western European markets, which is WE5, is likely to grow at 3 to 6% CAGR between 2019 and 2024 to reach $210 to $240 billion by 2024. Here in the table you see how the developed and the emerging and rest of the world market is going to grow and their percentages, and here you see the lot of the developed country wise USA and Western European countries, Japan, Canada, South Korea and Australia. So you can have a prediction of how the market is going to have perform in the coming years. Let's have a look at the emerging markets, or mainly the China and other developing countries. So the China has $142 billion pharmaceutical market, which is expected to grow at 5 to 8% CAGR to $165 to $195 billion by 2024, while Japan's pharmaceutical spending growth is likely to remain range bound. So if you look at the Indian pharmaceutical industry, which is one of the fastest growing market globally and the largest exporter of generic drugs by volume, the domestic formulation market in India has recorded 9.5% CAGR in 2014 to 2019 to reach $22 billion and is expected to grow 8 to 11% CAGR to $31 to $35 billion by 2024. So the total market itself in India is expected to grow at 8 to 11% CAGR in the coming years. So if you look at the specialty medicine, so the reason why we are looking at specialty medicines market, the Sun Pharma is also involved in specialty medicines. So let's have a look at specialty medicines, how it is growing over years. So the growing demand of specialty medicines has been a steady growth driver in global pharmaceutical spending during the last decade, especially in the developed markets. Specialty medicines are used in the treatment of chronic, complex or rare diseases which require advanced research and innovation. So given the higher pricing, majority of this product uptake is likely to be in markets with robust reimbursement systems. In 10 years from 2009 to 2019, the contribution of specialty products to be globally pharmaceutical spending rose from 21% to 36%. So additionally, in the developed markets, contribution increased from 23% to 24%, while in the emerging markets, it grew from 11% to 14%. The uptake of these products is lower in emerging market due to absence of or inadequate prescription insurance coverage for the masses. The growth trend is expected to continue as more specialty products are developed and commercialized for unmet medical needs. So they are likely to account for 40% of global pharmaceutical spending by 2024, with the fastest growth expected to be in the developed markets, while contribution of specialty products is likely to cross 50% by 2024. So then if you have a look at the API market, so Sun Pharma is also having some business in API. So the global API market is projected to reach approximately $232 billion by 2024 with a growing CAGR of 6%. And the last market we are going to look into is consumer healthcare, because Sun Pharma has also some business in consumer healthcare. So what is consumer healthcare? So consumer health products do not require prescription from healthcare professionals and can be purchased over the counter, which is also called OTC, from a pharmacy store. So the global OTC consumer health products market size was approximately $142 billion for 2019, recording a growth of 3.9% over 2018. It is projected to grow at a CAGR of 4.3% to reach $175 billion by 2024. The crux of this analysis is all the market is going to grow. Maybe the developed markets is going to grow at a slower pace, like 2 to 3%, and the emerging or emerging markets is going to grow at a much higher pace, at for example 8 to 10%. And some of the markets is going to be like Japan, it's going to be stagnant for a while, and the specialty medicines are going to have a higher growth in global markets and developed markets, and it's going to go a slower growth in emerging markets and the rest of the world markets. This is just a gist of what I have telling with all the data. So let's have a look at Sun Pharmaceutical Industries Ltd. So established in 1983, Sun Pharma is the largest Indian pharmaceutical company both in terms of market capitalization and turnover in financial year 2020. The company manufactures and markets a large basket of pharmaceutical formulations in India, US, and several other markets across the world. However, US and Indian formulations are by far the core strength and growth drivers of the company. So in US, it ranked 10th in US generic market. In India, it's number one pharma company. And in emerging markets, it is one of the largest Indian pharmaceutical company in emerging markets. So it's expanding its presence in rest of the world markets. So it has 43 manufacturing sites across the world. So it is present in more than 100 countries. So it has 36,000 employees, and it has a lot of manufacturing facilities to manufacture specialty products, branded generics, complex generics, APIs and ointments, injections, sprays, creams, liquids, tablets, and capsules. So they have a lot of manufacturing facilities. In Indian formulations, the company is a leader in niche therapy areas of psychiatry, gastroenterology, neurology, cardiology, nephrology, orthopedics, and ophthalmology. So the company completed the $3.2 billion acquisition of Ranbaxy Laboratories after almost a year of navigating the regulatory hurdles to create the world's fifth largest generic pharmaceutical company by revenue. So if you look at the 2020 worldwide generic sales in US billion dollars, the first one is Teva. It has $8.5 billion in sales, and the second one is Novartis, and the third one is Viatris, and the fourth one is Sun Pharma plus Taro. Taro is also acquired by Sun Pharma in 2010. So, and the next one is Pfizer, and then you have some Indian companies like Aurobindo, Lupin, Dr. Reddy, and so on. So these are the worldwide generic sales, and Sun Pharma is the fourth largest. If you have a look at their different business segments, so 30% of their revenues are coming from India branded formulations, and 33% is coming from US formulations. So US formulation is by far the biggest business for them as of now. So 33% is coming from US formulations, and 30% from Indian branded formulations, and 17% from emerging markets, and 14% from the rest of the world market, and 6% from API and other small businesses. So if you look into their segment growth, so Indian business is growing pretty good, Indian formulations, and US formulation is having a bit of stagnation. It's not growing up to the expectations. So we'll look into it a bit detailed in some time. So the next one, if you look into the US formulation, so as we discussed, it's a 10th largest generic company in India, and it has a sales of $1.5 billion, and 31% of their business is coming from India, and 69% of their business is coming from international market. So they are also having a good Indian branded generic business, and it's growing pretty healthy, and they have number one ranked with 9 classes of doctor categories. They have a leading position in high growth chronic therapies. So they have specialties in complex products. So they are also present in emerging markets in about 80 countries across Africa, America, Asia, and Eastern and Central Europe. So they have key focus markets of Romania, Russia, South Africa, Brazil, and Mexico, and complementary affiliated markets. And the rest of the world market, they are also trying to expand their business in rest of the world market. So their product portfolio includes injectables, generics for retail market, and so on. So let's dive into deep in each of these segments. So the first one is being US formulations. So Sun Pharma has been supplying generics to the US for over 2 decades. Its growth over this period has been driven by a mix of organic and inorganic initiatives. Today, it is the ninth largest generics pharmaceutical company in the US with footprints spanning generic, specialty, branded, and OTC segments. It offers a comprehensive portfolio across therapies tailored to a US market, which accounts for 33% of their company's revenues. Their key focus areas comprise central nervous system, dermatology, cardiology, oncology, and ophthalmic, among others. It is ranked second by prescriptions in the US dermatology market. So they have a wide basket of 587 ANDAs and 63 NDAs filed. So they have a robust pipeline of ANDAs and they are also present in all of the markets, and their manufacturing quality is pretty good. So then as we see, 33% is coming from the US business, and its growth is pretty concerning because it is stagnating over the years. It's almost remained flat. If we look at their ramp up in sales of their specialty products, the generic business continued to face price erosion driven by competitive intensity amongst manufacturers, buying consortium process, and a higher pace of generic approvals from the US FDA. So their subsidiary Taro recorded a 4% decline in overall revenues to 645 million for the year. So that's not a pretty good in US formulations because the growth is slowing down. So then let's have a look at the sales. So if you look at the sales for over the years, it growth pretty huge, and then now it's falling and it is stagnating over the years. So if you look at their key milestones in US, they acquired Taro Pharma and they did a lot of launches. So recently they did a lot of launches in specialty chemicals, which we will discuss later. So also if you look at their projections of the growth projections for the next year, it's just 0.6%. So their growth in US is going to be stagnant because of various factors. So their US business is not taking or not growing pretty much as expected going forward. So then if you look at the Indian branded formulations, so Sun Pharma commands 8.2% share of Indian pharmaceutical market with continued leadership in the high growth chronic segments and specialization in technically complex products. It has a strong sales force of 9,700, which reaches 4 lakh doctors across the country. It has leadership in chronic segment, strong positioning in acute segment. So if you look at their brand positioning, so it is number one market position. So it has number one rank by prescription across 11 different classes of doctors. So 31 Sun Pharma brands among the country's top 300 brands. They have an extensive sales force. So their top 10 brands contribute approximately 19% of India revenues. So they have diversified a lot. So in India, it's pretty healthy. Their Indian business is doing very, very good. So if you look at their sales in India, it's growing pretty nice. So if you look at the growth over years, it's grown from financial 2010 to 15, a pretty good growth, and even from financial 2015 2020 it's going pretty good. So 10-year CAGR of 19% sales, it's going pretty good. And if you look at their therapeutic revenue breakup, they have a higher percentage in cardiology, and then neuropsychiatry, and then gastroenterology and diabetology. So these are their biggest segments. And if you look at their growth expectations, it's going to grow at a CAGR of 11% in the coming years. That's pretty good. So the Indian business is pretty nice, but if you look at their US business, that's a bit concerning. Let's have a look at their market share. So if you look at their market share in India, Sun Pharma, it has a 8.2% market share. It's a market leader in India. So the next closest one is Abbott plus Novo, so it's around 6.3%, and then Cipla, and then Lupin, and Torrent, Dr. Reddy's, and so on. So it is commanding a very good position in India at 8.2% market share. Let's have a look at the emerging markets. In the emerging markets, it has a global presence in about almost 80 markets. Sun Pharma sells its products in multiple emerging markets, with Romania, Russia, South Africa, and Brazil being the larger contributors to the business. It is among the largest Indian companies in the emerging markets and offers a wide spectrum of market-specific branded products. So the company has local manufacturing of almost across 7 countries. It has approximately 2,300 sales representatives, and its revenues, it's 55 billion rupees in financial 2020. In emerging markets, it's 17% of their revenues. And yeah, they are doing pretty good in emerging markets. So they grew by 3% in emerging markets for the year. So they are witnessing a reduction in tender revenues in their South Africa business. So excluding the impact of the tender sales, they have recorded a low double-digit growth year-on-year for their emerging market portfolio. So also the depreciation of some emerging market currencies has also reduced their reported growth despite good underlying growth in their local currencies. So then let's have a look at their rest of the world market. So Sun Pharma rest of the world market present includes key markets in Western Europe, Canada, Japan, Australia and New Zealand. So where aging population and increasing incidence of chronic ailments are likely to drive pharmaceutical consumption. However, government efforts to tighten health care budget in these markets may act as a counterbalancing force. The portfolio includes differentiated offerings for hospitals, injectables and generics for retail markets, and long-listed products in the Japanese market. So their sales in the rest of the market grew by 31% for the year. So driven by increased sales in some key Western European markets and full year consolidation of their Pola Pharma acquisition in Japan. So then let's have a look at their API business. They also have API business. So the company API business provides cost competitiveness and supply reliability, reducing dependence on third-party suppliers. So Sun Pharma API portfolio consists of over 300 products across therapeutic segments. Besides using APIs for captive consumption, the company supplies API to external customers. Also, they have 329 DM of CEP approvals to date, so 443 DM of CEP filings to date. So they have across 14 facilities manufacturing of APIs, which I will go into detail in some time. So then we have consumer healthcare business. So Sun Pharma features among the top 10 consumer healthcare companies in India. Internationally, the company sells its products in over 20 markets with a focus on Romania, Russia, South Africa, Nigeria, Myanmar, Ukraine, Poland, Thailand, Belarus, Kazakhstan, Morocco, UAE, and Oman. It enjoys prominent brand equity in 3 countries besides India and ranks among the top 10 consumer healthcare companies in Romania, Nigeria, and Myanmar. In India, Sun Pharma's key consumer health brands involves Volini and Revital, which are ranked 26th and 83rd respectively in the Indian pharmaceutical market. So the distribution network spans 1000 plus cities and towns, supported by approximately 4 lakh retail outlets. So the new launches in India in financial year 2020 includes Volini Max Spray, Volini Max Gel, Volini Joint Expert Gel. So you might have heard Volini Gel, and you might not know which company manufactures Volini. So Sun Pharma manufactures Volini. It is the top brand for Sun Pharma. Let's then have a look at their manufacturing facility. So Sun Pharma has 43 world-class manufacturing facilities across 6 continents. So they have manufacturing facilities in India, Americas, Asia, Africa, Australia, and Europe. They have vertically integrated network across 6 continents. They are one of the few companies that has set up integrated manufacturing capability for the production of oncology, hormones, peptides, controlled substances, and steroidal drugs. So they have the ability to manufacture a variety of dosage forms like orals, creams, ointments, injectables, sprays, and liquids. If you look at their API manufacturing locations, they have 9 locations in India, 2 locations in Australia, 1 location in Israel, 1 in US, and 1 in Hungary. In Panoli and Ahmednagar, so both in India, so they have international regulatory approvals, US FDA and European. So they have standalone units for peptides, anti-cancer steroids, sex hormones. And then if you look at the Australia, Hungary, and the US, so they have controlled substances manufacturing. So if you look at their finished dosage manufacturing sites, they have 29 of them. So in India, they have 14, in US 3, and in Japan 2. So they have 1 each in Canada, Hungary, Israel, Bangladesh, South Africa, Malaysia, Romania, Egypt, Nigeria, and Russia. They have different forms of manufacturing in different places. So then let's have a look at their R&D investments, how it is panning out. So their R&D investments for the year were approximately 20 billion rupees. So they are doing at around 6.5%, to sometimes it increased to 8%. Now currently they are doing around 6% of their sales, which is going into R&D investments. So if you look at their ANDA filings, it is 587 and approved is 497. So if you look at the ANDA filed and approved over years, it is doing pretty good. And their ANDA approvals by therapeutic areas, so skin has the top one, and then the CNS, and then CVS, pain, allergy, and so on. Let's have a look at their specialty portfolio. As they gain traction in the specialty business, it is becoming an additional growth engine for them. Their global specialty revenues for financial 2020 were about $430 million and accounted for approximately 9% of their consolidated revenues. They undertook multiple initiatives during the year as part of their efforts to build the specialty business. These include new specialty product launches in US, targeting new markets like Japan and China for their specialty products. So they are evaluating new indications for Ilumya, one of their specialty product. So the reiteration of Ilumya's potential through long-term clinical data, they are enhancing the specialty R&D pipeline by adding preclinical candidates. So they have a lot of specialty portfolio. So as I said, Ilumya is one of the product which they are launched in several countries, and they have Sequa, they have Absarca, and they have Leuven. So they have a lot of different specialty portfolio. You can see it here. So I'm not going to go in detail to all of them, but these are their some of the main specialty portfolio they have for the future growth. Let's have a look at their recent deals. So they have exclusive licensing agreement with Himka for Ilumya for Middle East and North America. So they have a registration and commercialization of the product in all Middle East and North African markets. So and also the licensing agreement with the SPARC for SED044. So that is a global market. And they also did in-licensed terrific brand from Lockwell Medical Incorporation USA India, expands nephrology portfolio in India for treating anemia in hemodialysis patients. So they also did a lot of key deals over the years. So these are one of some of the main deals so they did during the recent years. So then let's have a look at their sales per representative. So how the sales is performing over the years per medical reps. So for example, in financial 2014 it was 11 million rupees, and then in financial 2015 it dropped, and then it again steadily increasing from 7.4 to almost 10 in financial 2020. So these are all about Sun Pharma fundamentals, and let's have a look at their financial income statement. So they have a sales of around 4,183 in March 2009, and it almost peaked out at almost 32,000 crores in March 2017, and it reduced, and currently it's sitting around 33,000 in March 2020. And then if you look at the operating profit, it is 1,864 crores, and it increased to almost 10,000 crores. Currently it's sitting around 7,000 crores. If you look at the operating margin, it was 45% and 34%, 40%, and it reduced to 21%. That's the main concern. So their operating margin is reducing. So if you look at the net profit, it was 1,818 crores in March 2009. It peaked out around almost 7,000 crores in March 2017, and currently it's sitting around 3,800 crores. So if you look at the compounded sales growth, it was doing pretty good for the 10 years, but then if you look at the last 3 to 5 years, it's not that great. And if you look at the compounded profit growth, it's not at all good in the past 3 to 5 years, which will reflect in the share prices. If you look at the share prices, it was declining for the past 3 to 5 years. The reason is because their profit growth is not doing good. And also if you look at the share price, it's starting to go up in the 3 years, but in the 5 years it's still negative. And the return on equity is also falling. That's not a good thing. Let's have a look at their sales. So the sales CAGR is 25% over financial 2005 to 2020, but in 15 to 20 the growth reduced. And if you look at the EBITDA, it also increased, but financial 2015 to 20 it reduced. And the net profit also it is reduced between financial 2015 and 20. If you look at the operating cash flow, it is increasing. That's good one. And free cash flow is also increasing. That's very good one. And then let's have a look at their margin. So their gross margin is reducing from 77% in financial 2016 to almost 71%. And if you look at the EBITDA margin, it was 27% and 29% in financial 2016 and 17, and currently it is sitting around 20%. So if you look at the net margin, it also decreased from 23% to almost 13%. And if you look at their return on capital employed, it also reduced from 16% to 8%. Return on equity reduced from 20% to 9%. All bad things. And if you look at the market cap, that also reduced because of this margin reductions, and their net profit eventually reduced. That's why the share price reflected their profit. So then if you have to look at the comparison of different companies, because Sun Pharma is reducing, that is clearly visible, but we have to compare it with the industry. So let's compare their margins with the industries. So this range in the ash color represents the range of top 9 Indian pharma companies, and this is the average of top 9 pharma companies. So the Sun Pharma gross margin reduced from 77% to almost 71%. In the meantime, the average companies hits around 63% to 64%. It's not bad. Sun Pharma is a bit above in the gross margin compared to the average industry. If you look at the EBITDA margin, it reduced from 28% to 20%. So if you look at the EBITDA margin of the average of different companies, it reduced from 22% to 17%. So industry itself is facing headwinds. So because of this, the industry itself, their margin is eroding. That's why Sun Pharma is also eroding, but it's pretty huge compared to the market, but still it's doing pretty fine. I think the ranges is still more, so some of the companies which are doing pretty good than Sun Pharma, but still 20% is greater than the average of top 9 companies. And if you look at the net margin, so it also reduced from 19% to almost 13%. But if you look at the average, it's 14% to 9%. So Sun Pharma is still doing good as a company compared with the top 9 companies in India's average. So there are some companies which are outperforming, but if you look at the net margin and gross margin, Sun Pharma is still doing pretty good in those aspects. Let's have a look at the balance sheet of Sun Pharma. So it is increasing from 8,000 crores to almost 68,000 crores, and their reserves are increasing. And if you look at the debt, it was increasing to 10,000 crores, and currently it's reduced to 8,000 crores in March 2020. They also paid off some debts in the past 9 months, so that will also be the their debts are reducing. They just have 0.12 debt to equity. That's a pretty good number, so that's pretty good. So they are reducing their debt. And then if you look at their return ratios, it is reducing, so but they are projected to improve a bit in the coming years, but still it's pretty low compared to what they are doing 5 years ago. Let's have a look at their cash flow. So if you look at their net cash from operating activities, it was doing pretty good in financial 15 to 17, and then it reduced, and currently in 2020 it was doing good. And the free cash flow also, it reduced in the past 2 years, and the current year the free cash flow is increased, so that's good to see. Let's have a look at their shareholding pattern. So if you look at the shareholding pattern, so the promoter holdings is almost the same, and the pledge, there is a pledge of promoter shares. It's pretty less, but still they have a pledges. That's not a good thing. I don't like having a promoter shares which are pledged, because that can create some volatility in case of drop prices, and promoter doesn't have proper collateral, then the banks might sell. So that's a problem. Yeah, I don't like promoters having pledging their shares, but still it's a small amount compared to what they have, so that's good. And if you look at the mutual funds, what they are doing, they are buying. The mutual fund shareholding are constantly increasing, but if you look at the FII, they are selling. So the FII percentages is reducing, but mutual funds are buying. This is a good thing and this is a bad thing, so it's a pretty neutral stance. We cannot come to a conclusion because mutual funds are buying but FIIs are selling, so that's a neutral stance here. So if you look at the mutual fund shareholding changes, as I said, mutual funds are buying. So in every quarter, mutual fund just increased their share. So their total mutual fund holding increased from almost 247 million shares to almost 279 million shares. Though they are buying, that's a good thing. Mutual funds are buying. So if you look at the top funds which are holding, for example, ICICI Prudential Value Discovery Fund, they are one of the biggest holders. They reduced their shares 4.02% in the last month. And the SBI ETF Nifty 50, they increased the shares. HDFC Balanced Advantage Funds, they increased their shares by 24%. And some of the HDFC SBI, they increased their shares, and some of them decreased their shares as well. Let's have a look at the promoter salary. So if you look at the MDs or managing director salary, their ceiling has almost, for example, 300 crores, and the promoter is holding pretty less compared to what the ceiling is. So that's a good thing. They are not having a huge salary, so that's pretty good thing. Let's have a look at their risks associated in this company. So I mentioned the companies is doing good, so there are some concerns. Margins are decreasing, and they are not their US business is stagnating. Their Indian business are doing good, but we have to strictly compare some of the risks in this company. So most of them are positive as far as I spoke, but the main concerns or risks in this company is, for example, so they have the corporate governance issues linked to the SEBI ordered forensic audit for 2016 to 18 financials, generic competition risk in Absorica. So Absorica is one of their main product, and their patent is going to expire, and there is a generic competition risk in Absorica, and an antitrust liability adverse US Department of Justice ruling on generic price fixing for multiple Ranbaxy products. So they are also having issues on some price fixing issue on for some of the Ranbaxy products, and they are also having, they just settled some $500 million in Taro. So for, I think that is also related to the price fixing. So they are also having some issues in US regarding these price fixing issue. They are also having, yeah, these are all the risks they have. So there is also one more case which are ongoing for Taro, one of their subsidiary. So that is also judgment come, can they might have to pay hefty payment settlement, because in the last, I think last year first quarter or second quarter, they made a hefty loss because of this 3000 crores which they just have to settlement of Taro, which is one of the subsidiary. So one of the case is still ongoing, and these are all the risks related to Sun Pharma. So we have to weigh between the risk and reward. So before investing in the stock, you have to analyze these risks and then decide. So that's the main thing. So then let's have a look at the valuation, our favorite part. The valuation, if you look at, do I'm usually more of a fundamental guy, but just if some people likes some technical analysis also, so I'm just telling what the technicals or what price is telling us. So if you look at the chart, it was going in a downtrend for so long, for almost 4 years. So it was in a downtrend, and it had a huge resistance here, and then it just went above, and then again it made a support on this line, and then now it bounced back. So there's a huge drop, and there is an accumulation period, and now it is in the recovery mode. So now it's doing pretty good. It was down by almost 73% in the past year, and currently it's up 135% from the bottom. So it's now in this trend. So if you look at the only technical means, so it's quite bullish, because it broke out and it's now going this path. It made higher highs and higher lows, so it's good. For the technically, it's going to, it's very good. Technically it's bullish. If fundamental supports, it can reach to this all-time high. So it's technically it's in a pretty healthy trend. So let's have a look at our fundamental valuation chart, so which is P chart or PB chart. So it was in the undervalued territory compared to the previous valuation in 6 months ago, or July 2020, because it's pretty outdated. So the PB chart is also pretty on the lower side valuation. But if you look at the current fundamental, or with the financial year 2020 valuation, so it was trading at a P of almost 44. The current P it's trading at is 44. So the I am talking about the trailing P, or the last year profit calculation. With the P, it's almost 44. So if you just project their financials, so if you look at the revenue, so in financial 2016 it was 28,000 crores, and it almost increased to 32,000 crores in financial 2020, and I am projecting it to be reaching 42,000 crores in financial 2023, with a revenue growth of 7% for 2021, 9% for 2022, and 11% for 2023. And if you look at the net profit, it increased from 4,500 crores, so it reduced from 4,500 crores to almost 3,700 crores in 2020. I am expecting it to reach again 6,700 crores in financial 2023. So it already reached 6,900 crores in financial 2017. So if you look at the net profit growth, so for financial 2021 it's minus 10%, financial 2022 60%, 2023 25%, unless they get some of the case settlement they have to pay, or some one-time fee they have to pay. So unless that kind of exceptional thing happens, I think they can achieve the net profit of 6,700 crores. So with the price target, with the current valuation, which is 44 PE with the valuation, I think I calculated PE with the 3,765 crores. So the current valuation is 44 PE. I think that's a bit overvalued if I see the current price. But then this number is pretty low, because yeah, they can easily reach in 3 years they can reach 7,000 crores if they do pretty good. And the PE was calculated based on the lower income, so it's not directly called overvalued. So if you calculate the price target with the current valuation of P 44, the 1 year target would be 621 rupees, 2 year target would be 994 rupees, 3 year target would be 1242 rupees. The price cumulative growth of minus 10% for 1 year, 44% for 2 year, and 80% for 3 year. But then I feel the PE of 44 is pretty on the higher side, so I'm calculating with a PE of 35 with a bit conservative approach. So for example, with the PE of 35, the price target would be 494 rupees for 1 year, 791 rupees for 2 year, and 988 rupees for 3 year, with a price cumulative growth of minus 28% for 1 year, 15% for 2 year, and 43% for 3 year. The company is pretty good. They are growing overall. They have some challenges to overcome. Their US business is going sideways, and their Indian business is doing pretty good. They have some regulatory challenges, or they have to settle some of the issues which is ongoing, and they have to face some price challenges. So they have to overcome all of these issues, and they have to come up with new products to get going with the price growth, or their profit growth to go forward. My take in this company is it's a pretty good company with some risks. So yeah, if you are already a holder and if you have a long term view, of course you can buy these stocks, because it's trading at a discount to compare to last 5 years, but then its net profit is also down comparatively. So currently I would say it's fairly valued for the net profit it is generating now. But if we look at the next 4 to 5 years growth, it is bit undervalued in my opinion, but it also has its own risks. So if you ask me if I would invest in these stocks for now, no, I would not invest in these stocks because the risk reward ratio for me is not beneficial. Yes, it has a pretty good reward, but there is also regulatory challenges and also some price fixing issues they have to overcome. There are a bit of uncertainty available in this stock, so I also find a better opportunities than this one. So comparatively I will not invest in this stock. But if you are a long term holder and if you want to invest for long term, you can go ahead. Of course, it's not a financial advice, so you have to do a due diligence before investing in any stock. This is just my personal opinion. So that's all for today. Thank you for watching, and if you haven't subscribed for the newsletter, you can subscribe in the link below. Yeah, I haven't sent newsletters for the past months because yeah, I was caught up with something else. So I will send this month newsletter by end of this month, and then I will continue my newsletter from the next month. So if you haven't registered for the newsletter, so please register yeah, in the link below. And if you like this video, like, share and comment, and also subscribe to the channel. And thank you for watching, and have a nice day. Bye bye.